I like those.
Welcome, everyone. This is our Wealth Press Roundtable Live. I'm Laura Cadden with the editorial team. I'm joined by Francisco Bremea, who's actually handling the technical aspects. He's here. Are you going to come on a camera for a minute? There he is.
Hey,
There's
Jeff.
his
Hey,
handsome face.
Hey, guys.
So he's the guy that responds to you in the chats, and he makes sure this flows nicely. And of course, we have our Wealth Press market experts, Roger Scott, Jeff Zananiri, Lance Ippolito. Nice to see you. And look at the shirt Lance has got on today. I'm telling you, he's untouchable on the shirt level. Untouchable. But we got a lot to talk about in the market news. So we had a really big bounce Monday and Tuesday, the largest two-day move in about 2 years. What do you think happened there? Obviously, things have turned around today, but what do you think that big bounce was in response to? Was it a technical one because we were so oversold? Jeff, what do you think? You see a lot of parity with that sort of stuff, right?
Both. It was started by OPEC over the weekend with the rumors of what they did today, which was a 2 million barrel cut a day, which stabilized the commodities market, which has been under a lot of pressure. So we came in with crude up a lot Sunday night. We had S&P futures bid off of that. And then it was just a technical place to bounce. It was like not news driven. You know, people, talking heads get paid to make up stuff on TV. And they were all like, well, there might be a Fed pivot. Where the heck has the Fed said they were going to pivot? Anything. Only word I've heard out of these people for the last month has been the word pain. They didn't pivot nothing. There's been no public announcement that they've changed their idiotic policy. So that was trying to substantiate a move to be more than what it was or what it is, in my opinion, from the talking heads. But what's important is that a technical bounce doesn't have to be substantiated by a Fed pivot. You know what I'm saying? It just has to be solid. The problem is it's not that solid as we're seeing today.
Do you agree, Roger? Do you think that's what's going on?
Yeah, I do. As a matter of fact, we were discussing it yesterday, and you know, Wall Street always, and I mean always, needs to give people an explanation. They can't just say it's a technical bounce. Nothing was really going on. It'd be like, what? That's just not good enough. So it's the same thing that you always hear profit taking, right? Have you ever heard them use the word loss taking? Never, right? It's always profit taking. Everybody's always taking profit. You know, 50% take a loss, the other side take a profit. Anyway, so I totally agree with Jeff. I think it was a combination of OPEC, because we saw a huge move in energies, and most of it was a technical bounce, which was way overdue and much needed.
Well, look what's solid today. Oil still solid. Oil stocks are still solid. They're solid today. So that's telling you what you need to know, what dragged it up in the first place.
You agree, Liz?
Yeah, I think too, if you look at Friday, I mean, the market was getting crushed, especially in the afternoon. I remember I was going on webinars. I won't name any people, but I was watching other people's webinars in the industry, and they were all saying, I'm buying puts, I'm buying puts, I'm buying puts. Everyone's getting short. And I was like, gosh, Liz, everyone's buying short. Here I am feeling like a donkey for buying cheap out the money calls. And Monday morning wakes up and the market's bid. And I'm like, ooh, awesome. My out the money calls are paying. This is great. And I wrote these in my morning notes Monday for Wiretap. And I was like, man, everyone is coming in short today. Don't be shocked if we have a big squeeze higher, a big short squeeze higher. And we did. The problem was I sold on Monday. And then what happened Tuesday? We had even a bigger squeeze to the upside. And I was like, damn, I shouldn't have sold on Monday. But all those shorts that came in Friday, let's say they reloaded on Monday on a gap up, then they just gave up. They threw in the towel on Tuesday on a big move higher. And now you ain't got no one short. You got longs down today. You know, it's the market, right? It's a roller coaster, and I think it's healthy though. What actually we're seeing, at least today.
About today, the tumble today. So there was the job numbers that came out this morning. So perhaps that's signaling the Fed that their rate hikes are right. I mean, that could be part of what's happening here, right? but the European markets tanked first. So obviously that's not the job numbers. Is that due to the Credit Suisse news? What do you guys think about that? What do you think, Jeff? What do you think's happening here?
When at what point? Back that up. The first part I missed. They sold off when first?
I mean, just about the stocks going down today. Why today? Why the tumble happening today?
Well, we saw futures. We got stretched to the upside yesterday. We had 5.7% move in the S&P 500 in 2 days, which hasn't happened since 2020, since April 2020, which was post-COVID. So we had a very abnormal, atypical 2-day run to start a month in October, which is very good for my system, which I'll be talking about later. But that abnormality it renders itself to overshooting and to reversing a little bit. So we saw almost instantly after the cash close, we saw that futures were down. Literally, stock market, when I say cash close, I mean stocks closed at 4 o'clock. At 4:20, 4:30, NASDAQ was already down 50 basis points, 0.5%, the futures. So that starts the momentum. And then we've had some hemming and hawing out of the UK. We've got a new prime minister Truss. Now that the Queen's dead and buried, and they actually have to go about the business of managing the country again. She's flip-flopping. They're going back and forth. The pound is whipsawing people back and forth. She wants to cut rates on the top earning people in England. She doesn't want to. They don't know what the heck they're doing. If we think our Fed is a comic show, you haven't seen nothing until you look at the United Kingdom. It's like the Benny Hill show. You remember that old show?
Yeah.
Oh, I love that show.
Yeah, this Benny Hill show going on over there. So European weakness is really more coming out of UK, but also sensitivity to oil. This oil thing is really going to be nasty for the Europeans this winter. Energy crisis.
We'll go back to that in just a second too. Roger, what are your thoughts?
Well, I actually heard I heard your question, and I let me respond to that. I've noticed over the last few weeks, specifically over the last few weeks, maybe now in its third week, that the pressure has not been coming as much from U.S. stocks as it has been from European and Asian stocks. And that's kind of what I've been talking about. And Jeff and I talked a little bit about that yesterday as well. And last week too, that you're starting to see the major catalysts for the downside not come from U.S. You're starting to see U.S. strengthen, and then again in the morning it's opening up 300 points down. That's mostly a reflection of European and Asia, and it's actually pretty natural if you think about it, because the recessionary pressure. I mean, U.S. is still the #1 economy in the world, and everybody's looking to U.S. But U.S. is starting to the ripple effect is starting to move globally, very, very globally. And I don't want to use the word start globally, because move globally, because it actually has been there for quite a while. But the big ramifications, the interest rate ramifications that we're having here, the earnings ramifications, they're really spilling a lot to Europe and Asia. But that's in an aspect, that's not the worst thing that can happen, because usually, and we've seen this in 2008 and we've seen this in 2000, the selling pressure starts in the U.S., moves to Asia, moves to Europe, and then we start seeing small caps strengthening. So this could be the second leg of this downfall. The first leg, the June downside that we had in the stock market, was square. I don't want to say squarely, because it's all global economy, but a lot of that was was coming from the U.S. The last leg down that we've seen, especially the last couple of weeks, it's been really noticeably from Asia and Europe. So I want to bring everyone's attention to that, because the sentiment has been shifting quite a bit from U.S. economy taking us down to global economy taking us down. And that tells me that we may be in the second stage of this recession, bear market, whatever you want to call it.
It's a grim thought. Lance, what are you seeing from the trader's perspective? What kind of options activity are you seeing? And does it kind of reflect any of this internationally?
Oh, no. Listen, come on now. You don't see any paper. When I mean paper, I mean option flow. You don't see any flow past next week expiration, really. I mean, everything is so short term that it's just, I don't think nobody really knows any direction. you know, if you think about it, if you came out and said, hey, Credit Suisse is on the verge of defaulting and the stock rips, you know, 20% in 2 days or so, I mean, how does that make sense, you know? And they've been loading up on calls on it, which is outrageous. They've been right though so far, but it's just it's very, very short term. It's a lot of momentum names like Tesla off the Twitter news yesterday. You get a lot of financial flow and you know, that the financials moving very sensitive, obviously, to interest rates, but it's so short term that, you know, it's great for day trading, but if you hold anything overnight, you're putting yourself open to, you know, basically playing the market direction, which isn't that fun. So trying to avoid that stuff, but option flow, if you watch my daily videos, continues to be very, very short term. You know, even to be fair, even the energy names, we've seen a lot of Schlumberger, Exxon, Marathon Petroleum. I mean, these guys are buying such cheap out the money weekly calls that they've been right, but you know, they expire Friday, so they're in and out the next day or so, or even intraday, that you're just not seeing any commitment to long-term capital, like you would if we were in a trending market. That you would see, you know, lots of, let's say, December, January call buyers, let's say in tech or sector specific. You just don't see that anymore.
Very interesting. Roger, you mentioned earnings, impending earnings. How do you see the impending earnings season kind of play out in this market right now? We have Levi, Conagra reporting on Thursday.
Yes, Levi's. Actually, that's a very good point. Well, to start this off, the real beginning of all of this is Nike. Nike came out a few weeks ago, and you know, Nike's substantially bigger than any of those two. But that's where the focus is right now. Nike came out. They said they're expecting things to get a lot worse before they get better, especially internationally. And you guys know I've been really the international markets have been really doing a number on U.S. markets, as I've mentioned the last few weeks. So I'm not expecting anything really different from these brands. These brands are not U.S. brands. I mean, they are U.S. brands by legally, but they're over. I mean, you know, Levi's does a lot of their overseas. People love Levi's everywhere. I mean, Ukraine, Italy. I mean, you know, I don't have to explain this. People know this. It's been around the block a few times. So we're not expecting anything great, but I believe that the majority of this is already priced into the market. It's kind of like last earnings season. Markets rallied hard. Why? Because earnings were good? No, they were awful. They were god awful. But the estimates and the expectations were already priced in. And I think we're starting to see a lot more of that, especially with Powell hitting the what was the words he was using, Jeff, on his last speech?
Pain.
Pain. Pain. Yes, pain.
It's the only word you need to know is pain.
Exactly.
When he says nonstop.
Exactly. There you go. So with that in mind, I think we are going to see upside surprises, not because things are great, but because we're seeing so much of it already priced into the market. And again, technical momentum levels we're still, I mean, I hate to say it, and I hate to scream, you know, the whole cry wolf thing, but we are in like 2008, 2000, below 2008, below COVID. That rubber band isn't stretched out like this. It's stretched out like this right now. So I think we're going to have some positive surprises across the board. I'm starting to look a lot at biotechs because they're being bought out by the larger healthcare stocks, and they don't have a lot of exposure to interest rate fluctuations or as much as, say, consumer stocks. I would be very nervous with consumer stocks, and I am starting to see some hope for semiconductors, because we're seeing two sectors of the technology outperforming and growing at a monumental pace, and that's security and whatchamacallit, the cloud. Those two things are very much keeping computer chip sales very hot, and I think that will continue. We've seen some positive reports. So don't be surprised to see healthcare and chip stocks outperform expectations in the coming quarter.
Do you guys agree? There are other sectors you think would expand, Jeff?
I don't see how
contract.
you should veer away from this energy play. These guys want this. They want crude over $100. Last time crude was $100. All these stocks are 20% higher. I don't want to overthink this. I don't want to know when the pain stops with Powell. I know what OPEC wants. OPEC wants money. They want cashola. They're not political. They don't want the Democrats reelected. They don't give a shit about Joe Biden's approval ratings. They want money. So when I know what people want and what they're going after and they generate it, I like to play with that. I don't like it when there's all kinds of side nefarious things that people want, outcomes they want, different masters they're serving. OPEC wants less oil on the market. They're going to put less oil on the market. There's going to be a supply constraint. There's not going to be enough energy to supply Europe. Winter comes, it's already cold in Europe, and this is an easy trade. Let's keep it simple. Let's keep it easy. I don't have to find the bottom for a longer term point of view of Powell's pain train because this guy is not playing this game straight, in my opinion.
Pain train. I like it. Lance, you agree?
It's even if you played chips, like I was day trading some WDC options. Stocks up 0.5% today, while other chips are getting crushed, but the options are down like 20% because of implied vol. So if you're trading options, it's just difficult. You got to figure implied vol is so high, and the range of these chip names they're so volatile. They're moving like 3-4% a day. That I guess I think they bounce from here, but like I don't know how I'm supposed to trade it, and by selling out the money bull put credit spreads, because you get a move unless you're getting like a 3-4% move, you're not really making money. So that's what makes I could call a bottom in chips. WDC looks great, my favorite one, but like I don't know how I make money on them besides selling premium.
It's so tricky right now. Have you ever seen a harder market in terms of like the future being less obvious, things being priced out already in both directions, which is why you're seeing what Lance was saying to build on what he was saying. You're not seeing real money committed specifically in the options market. That's the first liquidity pool to drain. You start seeing the options market seize up. There were years where no one traded options, by the way, kids. I don't know how new to this game you are, but like 2000s, great financial crisis through like 2012, 2013, even the biggest stocks in the world traded a couple of hundred contracts. Ones that are trading like 10,000 contracts an hour a day, we're trading a couple of hundred. Options market was dead. So we're starting to see that seize up because of all of this like insane possibility of different outcomes, so to speak.
You're really, so if you look to let's say, and I hate to compare it to last year because it was such a crazy year for markets, but you don't see the kind of paper, option flow paper, you just don't see it like you did last year. Like you'll have your typical characters like your Teslas, your Bank of Americas, your Apples, but because they trade millions of option contracts a day, but you're not seeing like that those other names, top names, and that in the sectors, in the chip space, and the technology space, you just don't see that commitment. And it could be liquidity. If you look at bid ask prices, how wide, you don't have that same kind of involvement that you did when the market was trending and when people were on the computer screens or so. Even the financials are difficult to trade. Obviously very good liquidity in names like Bank of America, Citigroup, Wells Fargo and stuff, but I think last week we all talked about financials, and I had some Citigroup calls in November that I was down like 40% on. Then they went green, up like 10%. And I got out, and now banks are getting crushed again today. So it's like, you get 2 days of a green day, and if you don't take profits, then you're back down 20, 30, 40%. It's just, it's hard to commit. You really want to date stocks, over the
That's
weekend.
a recurring theme with you, Lance. The golden
Serial
thread.
dater.
That's a golden thread.
It's hard to say, hey, this is a great stock or this is a great sector when it's such a roller coaster. Like Jeff was saying, really energy has been the only consistent.
Well, you don't the news bombs.
go-to.
Yeah, because you got to price in, like what Roger was talking about Nike. You got to price in the possibility that whatever stock you like or sector that you're looking at will have someone come out in the middle of the night on a Tuesday and say, oh my God, we had to shut down our factory and we're not producing, we're not getting certain things. Like I'm trying to buy drawers for a dresser from IKEA. They got the dresser, but they don't have drawers. I'm like, how the hell do you not have drawers for a dresser? Oh, well, our supplier doesn't have them. So if you think of that, if you think in those terms, any company in the world can come out and say right now, we're just not going to make the money you thought we were going to make, except for energy companies. You're not afraid of that. I'm not afraid of Exxon in the middle of the night saying, you know what? We can't sell enough. We can't sell. We know there's clarity, there's visibility there. So you have to price that in, which is difficult right now. But I mean, October, we can still get mega bull counter trend trades in stocks specifically, maybe not the entire market, but we can see massive moves. We've already seen in the first couple of days the possibility of that.
Well, let's segue to something that has been all over everybody's news feeds lately. The National Association of Home Builders has already said that we're in a housing recession. They stated that like a month ago. We, of course, have the rising mortgage rates. We have slowing sales prices in many regions, if not nationally at this point. The biggest thing that concerned me was the price to income ratio as compared to housing prices is an all-time high. What that means is based on the average income of Americans, the vast majority of working Americans can no longer afford to buy a house at all. So for sellers, we're also looking at the second fastest price drop since the Great Depression. Like, that's crazy. That's what happened through July. So I'd like to know what you think this means for us as traders. Lance, how does this kind of stuff impact your strategies? Do you look at anything that has to do with housing?
No, I mean, I know housing's coming down, but I don't. You said that was what, based on July?
Yeah, started like the fastest drops in prices that we've been seeing. Yeah.
Wow.
Started in
So
July.
I mean, I'm sure it's gotten worse since then. You know, I'm lucky to be in Florida where the housing market still seems relatively strong compared to, let's say, other cities or left-wing states where maybe people are moving out. Chicago, Cali.
What?
Yeah, why aren't people running there? It's so great.
Yeah. So, we still have demand. I know
utopia.
maybe the hurricane scared some Northerners, but, we don't want you here anyways. But
Isn't everybody
But,
in Florida from New York or Chicago anyway?
Right. Yeah. If anyone's from
somewhere up
there,
there.
sorry. Not really, though.
New
But
Jersey.
it is. I have a lot of friends, and they do well, we'll say, young, my age or around my ballpark, and I see them buying like $1 million homes or $800,000 homes, and they're, I mean, basically starter homes, and it's crazy because I know they're not making that much money, and that's really the only thing out there on the market. I think the average home in like my area or like Tampa is like nearly 500 grand or so, like the average like or starter home or something like that. Like I think that's insane. And then you have basically double your monthly payment. You don't have that same kind of disposable income that people once did, especially after all the semi checks and everything like that. Everything's gone up too. It's not just home prices. It's, powering your home. That has gone up so much too. I think we had someone say it's up like 3x from their payment last year, their electric bill. But what I see it is the auto market. If you look at CarMax, absolutely crashing. CarMax was 85 to 65 in a day. So you're seeing the car market, especially the lower end cars, more inventory. They're not overcharging your premium cars. Yeah. Your Lexuses, Mercedes, Corvettes, your luxury cars are still holding up, but the rich are still rich. But I've even seen at the boat market, we were looking at marine stocks, boat stocks the other day. These names have been cut in half. People are pulling orders of reservations they've had, whether it be cars, whether it be boats. I'm sure housing now, because they're like, oh man, that house now, I can't afford that payment. You're starting to see that unwind. And in my opinion, that's very scary, because this is really the first inning of it. Just wait till that snowball really starts building and people realize they don't have the money that they used to have, or I should say what they thought they had. And that's obviously going to impact stock prices, and has probably impacted stock prices and the home builders. That's why they're down so much. But I think the best thing we can hope for is some stabilization, not just a dramatic fall. I think if, down a couple more months or flat, stability is what people probably want, and not panic and saying, oh man, this house I bought for $1 million is now only worth, 700,000, now 600,000. What am I going to do? That's when people get really scared.
You saw Rich's question about RVs. Are those sales going down? Has anybody checked like Winnebago's? Are they down?
Yeah. Oh yeah. A lot.
Well,
A lot.
people aren't, and COVID really drove the RV market and everything. But you got to figure RVs, obviously gas is a lot more expensive. But if you look at an RV, I don't know if anyone's shopped for them. They're not like your typical $50,000, $60,000. Oh, I'm going to get me a camper van, stuff like that. Like even the small rigs are just absolutely incredibly priced. I mean, you need to be a multimillionaire to afford an RV to go travel the country. It's not like, oh, that's just some hick want to go camping out in the mountains out there. Like it's a rich man game. And someone said the average payment, what is it? The average car purchase is $41,000. Average monthly payment over the third quarter was over $700. That's nuts. Yeah, RVs are tiny new homes. Exactly.
But if you can't afford a home, if it's cheaper than buying a home,
RV either.
Right?
Laura thinks about humanity way more than I do. If you can.
Laura, I think one of the biggest problems is not the decline in the real estate market. I think one of the biggest problems is the fact that interest rates have almost made payments double what they were 6 to 9 months ago. I think that's the biggest problem, because the problem is you're paying now, even though the home maybe lost 10% of its value, you're paying 80% more in payments, and most people aren't paying cash. That's where the biggest problem is. So I think the biggest problem is for people who just can't afford the current payments, and I think that's what's really screwing the market. And I think as a result, you're going to see a huge continued influx into the rental market. I think the rental market is going to be massive over the next several years, and I think a lot.
Stealing my thunder, Roger.
Well, hey, I'll let you talk about it.
Well,
I'll let you talk about it.
Jeff,
I think that's an excellent point.
I'm gonna segue to Jeff. You will own nothing, Jeff,
and you'll be happy.
And you will be happy.
So the word I kept hearing, the word I kept hearing from Roger was the problem. It's the problem for some. It's a massive win for others, for a few. So you always have to look at who wants something to happen, like who wants it to be that way. And Roger was illustrating it with the rental companies, but there are people that are getting into the game that are not traditional rental companies either. So let me do this presentation I have for you, because I did a bit of studying. I don't study a lot, but when I do, I dive in. And Laura's laughing, my surrogate teacher.
I don't study a lot, but when I do.
When I do. Where are we? Hold on a second.
Good.
Huh?
It's good.
It's good. Exactly. So, oh yeah. All right. We're on the front page. I just didn't see my face. Usually we have a photo of me. But right now, there's an issue escalating the economy. And so pretty much no one is safe, right? But we already know that. So there's a house of cards that's about to crumble. And this is like, you're still reading this headline today. Like we didn't produce, this was from September 28th. But this same headline is still crossing the wire today. U.S. mortgage interest rates jump to the highest since mid-2008. Same thing being read today. Part of the reason the market's soft today is because mortgage rates are going wild to the upside. So mortgage refinancing drops to a 22-year low. Interest rates surge even higher. Mortgage rates, if we can't afford higher payments, we lose our home. This is like everywhere. These are all articles that we pulled for you. It's not a good time for the home buyer, nor is it good for the homeowner. It could be setting the United States up for one of the greatest housing doomsdays we've ever seen on record, worse than '08, but a huge opportunity. Like I said, there are people that want this to happen. This is not by accident. These rates being like this. Oh, we're going to cause pain. Well, maybe your boys aren't going to experience as much pain, Mr. Powell. Here is the gist of it. If someone wants to spend around 2 G's a month on their mortgage, here's the type of house they can afford. Cookie cutter, kind of what Lance was talking about. But in Tampa, this is like 800 grand, right? Normal lending rates, no inflation, 2,000 mortgage, right? Then COVID-19 happened. Interest rates went to near 0%. They panicked. The government went crazy with the spending, low interest rates, stimmy checks galore, $2,000 mortgage. And before we knew it, home prices were booming, up 30%, 50%, 100% in some areas. Inflation was out of control. The Fed needed to hike interest rates. They were so late in doing it. I've been screaming this from the mountaintops. They were also on purpose so that they could sell. People think I'm conspiratorial, but somehow these guys sold all their shares last December at the highs of the market.
We don't talk about that. We don't talk about that. We don't
somehow
wink wink.
You know, at an abundance of integrity, we felt that it was important that all the Fed governors sold all our shit right here at the high. And then you poors, you're going to feel pain, right? On purpose. New mortgage rates are as high as we've seen in the century. Plus home prices are crazy. So high interest rates, what Roger was talking about, can't afford the same house. House is barely nudged to the downside. Extreme inflation across everything. Food, air conditioning, you name it, it's all way up. No one can afford a normal house right now, and it's creating a wealth migration, right? The house of cards, the rush to American rental homes. So BlackRock, which is a massive money manager, the $1 trillion investment bank, is buying up homes. These guys used to just issue like ETFs to buy Apple. They're buying houses outright. Harrison Street formed the $1.5 billion joint venture in single family rental communities. Blackstone, you got to keep your eye on Blackstone, hint, hint, acquired Home Partners of America and its 17,000 rental home portfolio. Blackstone's the largest. Like, this is a fun fact.
BlackRock and Blackstone are the two. I didn't mean to interject. I just wanted to say they're the biggest ones, dude.
BlackRock is the biggest money manager on planet Earth. Blackstone, and this is a fun fact, is the largest landowner in the United States.
Wow.
Really?
Yep.
Blackstone.
Yes.
And JP Morgan Chase, Morgan Stanley, and many more rushing into the spree. Bezos, who got famous sending like crap you don't need to your house every 15 minutes, is buying houses also outright, right? So I identified one stock I think is going to benefit as soon as this month, as the Fed keeps doing Operation Pain to normal Americans, sending mortgages sky high. Morgan Stanley owns 1.9 billion of this company. BlackRock owns 3.6 billion of them. Vanguard owns another 4 billion. It's a massive company. In 2022, this company went all in. Today at 1 o'clock, I'm going to be hosting a class. I'm going to go much more in depth on it. For you guys here at the roundtable, I want to give you an early bird opportunity. I'm letting a limited number of folks check out the stock pick early, but that ain't it. Every month, I use my Bloomberg to isolate the big money flows Wall Street's piling into at the beginning of the month. In this case, it's the beginning of a new quarter also. Look at some of the best trades I've had. 210% in Workhorse. That was a $2,100 profit on 1,500. Wow. Look at this 140% in less than a month on Nucor. 2,000 would have turned into 2,800. See, this is how you fight back against Operation Pain. 423% opportunity in Coterra. $2,500 would have turned into 10 Gs. Now we're talking my kind of money. And right now, your timing couldn't be any better. It's the beginning of the month. It's the beginning of a new quarter also. I identified 9 opportunities for you to follow the money. So while no investment wins all the time, my goal is to tee it up so easy for you. to give you the best chance at the next triple digit winners in a month. Look at these returns. These all happened in under 30 days, guys.
Wow.
In 2022, this year. This isn't like past history. And this isn't this crap, this dog poop, whatever you want to call it, whatever your vernacular allows you to say, that kind of market. We still have these kind of returns, real-time stamp trade ideas, real talk. 352% on DGX. You kidding me? 362% on ADM. All happened this year. So today, yeah, I'm inviting everyone to unlock these 9 trades. Just came out in my premium trading service. Look at this beautiful Miami Vice. You guys at Wealth Press do such a cool job of graphic design. Honestly, kudos to you. Beautiful work. I love it.
Yeah.
So come into Money Flow Elite. You get 9 trades on average per month. I give you the entry, the exit. These trades just came out, by the way. They're hot. They're hot. And today's a great day to get into them. You see, Wall Street tips their hand at the beginning of the month. If you want to learn more about it, I can talk about it at 1 o'clock. I'm going to talk about this phenomenon, how I track it, the same way that I track this housing thing that's happening. These guys gobbling up all these properties around the world. And I'm going to give you another bonus, reverse monthly money flows. You can see who people are puking. I also have a bonus trade on a company I hate because of this secular phenomenon that's transpiring. They're also part of Operation Pain on the losing end, if I may. And then I'm also going to give you, this is a really important piece, reverse money flows. You're going to see how you can make money on bearish trades. I could sell that for $1,997 alone, okay? Just like Wall Street likes to pile in certain stocks, well, they pull out of stocks. They sell stuff too. And we identify that. That's why it's a complete portfolio to hedge portfolio. I use reverse money flows. They've been able to not just save the portfolio and the positions, but to turn the monthly portfolio into a sizable winner. For example, in January, S&P was out of garbage, now 5%. But this was the percent gain in January. Look at this put in DGX, 352%. So this is both. This is all trades, winners and losers. We had a 39% loser in Region Financial that month. Didn't matter. The total portfolio was 77%.
You're giving them a lot of trades, Jeff.
Yeah, today
a lot of trades.
They're all hot. They're all fresh. Thanks, Roger, for pointing that out. I was up till like 1 o'clock in the morning. Somebody said it to me right now after, doing all that I do. Oh, wake up, Jeff. Well, yeah, easy for you to say. I went to sleep at 1, woke up at 5 to see where the markets were. I get tired sometimes. I work hard.
And Jeff uses institutional. And when I say institutional, I mean he uses a Bloomberg terminal. You can't get any more institutional than that.
You have to have it to track these flows, to see who to see who all these companies are buying up, BlackRock, et cetera, to see the institutions, how they're dipping their toes into the water. And another month, 80% gain, winners and losers, because of that reverse flows also. So it's worked both ways. In March, S&P was up a lot. I'm thinking October might be a bullish. Honestly, I've been sitting here sounding super bearish, but we have these counter trend moves. I've seen them tipping their hands in some of these stocks early in October. We could have a big month in October. I think November.
Don't most bear markets reverse in October?
They do.
Yes,
they do. So I think we can have some volatility in October being strong. The November is weak, and then we come back in December. Who knows? Your guess is as good as mine. I don't have to know, because I know which stocks they're going to buy when they want to buy stocks, and I know which stocks they're going to sell no matter what. So we got 27% in March with the market up. So no strategy is perfect. You can see the monthly portfolio. There's winners and losers. All things considered, though, this is important. You would have had $9,256 in profits in just the first 3 months of the year, while most folks were getting their, their keister handed to them. So today I want to make this a no-brainer. $7,073 value. Look at this. Like every one of these things could be piecemealed off a la carte. Like when you go to a fancy steakhouse and they're like, oh, that macaroni and cheese, that lobster mac and cheese was $40. It's like, what, homie? Are you kidding? That's some noodles there. $40. What? So we could do that with this too. We could piecemeal this thing out and charge a couple of grand for each one of them. We're not going to do that though. Okay.
We don't charge by the noodle. We don't charge by the noodle here.
We don't charge by the noodle. You know what Roger, the places I'm talking about where you get the sticker shock at the end. They're like, you're like, can I get some bread? I like to eat sauce with bread. I'm from the Northeast.
Extra fee, corkage fee for bread.
And then the bread was like $17 and they're like, it's focaccia. What do you mean focaccia? What are you talking about? Anyways, we don't do that here. We're going to give it to you all together. Before you see today's mind-blowing price, you join today. You're not going to just get my top stock to dominate this house of cards. This is my top pick. And this is not just a monthly pick. This is not a weekly pick. This is a multi-year investment idea. And there's deep research on it. You're also going to be seeing my number one stock to avoid like the plague. And I've been pretty good at pointing out these big secular moves. Like I said, I don't always do my homework. When I do, it's kind of right. So you'll get the stock to avoid. If you have it in your portfolio, you might want to kick it out. If you know how to trade from the short side long-term, maybe you do that too. I want to take you guys, all the pressure off you guys. I'm going to give you 30 days. You get all these trades, 9 of these trades right now. You can use them, win them, spin them, whatever you want to do with them. And you don't like it, you come back in 30 days. We'll try to put you in another service that's more suited to you. Or if you don't like trading in general and you want to go rent an RV and just like do yoga nonstop, we'll give you every dollar back too.
So it's the 9 trades plus the 2 bonus trades related to housing.
That's exactly right. And they're saying that's $394 for those 2 trades, but I think that's lowballing me. Sorry, that's deep work. Anyways, 77%, right? On just 1 month, winners and losers. New trades today, ain't gonna run half of that. They're fresh, they're hot. You can access the monthly portfolio that's up triple digits this year for just $14.97. Nope, that's not the right price. They fool me because I have to read it. $12.97, nope. $9.97, nope.
How much?
Better. $97 for your first
97. Holy
Oh,
moly.
nice.
That should be illegal around here. What the hell's going on?
You can't even air condition your bedroom for $97 right now, much less your entire house. So $97, you get all 9 of these trades right now. For me, it's
get in,
no-brainer.
folks. Get in.
Yeah.
That's what is it? $9 a trade? Is that what?
But you know the big arbitrage here, which I haven't thought about till I just saw this damn number, was they're going to get what I thought was a lowball number, $400 for the research report for the House of Cards, included in this $97. I don't know.
They're getting bonus
my
picks.
partners
2
thought
bonus
about
picks.
that. Yeah, that's what I'm saying. They're getting the bonus picks for like. Anyways, whatever. I agree.
It's a great, folks, take advantage of it. Jeff is hot. This real estate stuff he's talking about is really stuff. You have 30 days. It's no commitment. It's a great way to end the year. I really do think so. And Jeff is very good at global trends. This will kind of put it all together for you.
There's some exciting trades across, I have my scanner in my Bloomberg that shows me mega size coming in early in the month, very abnormal moves, couple of standard deviation moves for the beginning of the month with volume to corroborate it. And then I have 9 trades. I have 6 bullish. I have 3 bearish. Those bearish sometimes make up the entire month. And I'm seeing where people are selling. I'm seeing where they're buying at the beginning of the month, big institutions, and I give you a stock and an options way to play it.
And if it's 97 for the month, can they renew at 97 again, like on a monthly basis?
Yes, absolutely.
Yeah, somebody was asking about that in the chat. That's what I thought. So this is a wonderful way to check out.
But you can also lock it in if you're probably like more inclined to give things a longer shot. You can lock it in for a year at an even cheaper monthly rate. If you
Herb, that answers your question. If you guys take Jeff up for a year, you'll get a very nice discount for taking Jeff up on that. It's a substantial discount even off of this price.
Yeah,
which is really crazy.
You're getting $97. We're giving you guys all the trades.
Too much, Jeff. You're giving too much.
How to trade bearish.
Too much.
The deep research report for the House of Cards, which in itself should be probably $1,000. $394 is a low ball price. I'll talk to you later about that, Graham. But we've also we've got other perks too. Listen to some of the best students, what they said. His account grew 600%. Zach from Augusta.
Wow.
Maybe you're going to play at the Masters next year, Zach. 1591 profit. That's awesome. Way to go. $1,300, 90% gain. So we're at the end of this, but post in the chat how people can sign up for this thing.
Cyrus just joined. Frank joined. Ralph joined. Ralph
Lance
really joined. Yeah, Uncle Roger just joined. Yeah, seriously, folks. If Lance and I are interested in this stuff, it's really hot. And I mean, this is really hot. I'm very, very interested. I'm going to be there at 1 o'clock listening into Jeff, taking notes. And I suggest you guys do as well. But get in on this now. Beat the traffic. It's going to be a madhouse. You can still reach out. You can ask customer service questions. You don't have 500 people on call right now. Jeff is red hot. This program is red hot. As I'm sitting here talking, Jason just got in. I mean, this is really good. Get in now before we realize how much value this is and double the price. which
Well, the
could potentially
big
happen.
thing is these stocks, these trades are already there and they're already moving. I get pissed off because like there's other people that know how to look at things the way I know how to look at them. And so I put out the trades in the morning. I'm up till like 1 o'clock last night, but then I'm up at 5 a.m. looking at, so I don't know if you all know this, but 4 a.m. is when you get pre-market NASDAQ stock trading. Very little numbers, but you can start to already see. This is junky shit that I'm telling you right now. At 4 a.m., you can see preliminarily where these stocks are starting to get priced in the pre-market based on the futures move and what Europe's doing. So I'm up at 5. I give myself an extra hour so I can more appropriately give limits for these people to enter the new trades. What I'm trying to say is that these trades are already moving. They've been out. You get in now, they're hot trades, but they're already moving in the direction that I want them to. Not all of them. Some of them are like the price is awesome, but I expect the market to start going their way also. So fantastic day to get into these trades, frankly, because of like what happened in the first couple of trading days, we saw a huge volume coming into a lot of these names, and a lot of them are pulling back a little bit this morning, which is giving a really optimal entry point, in my opinion, into these long position trades.
Les just got in. Les took the advantage.
Yeah. Get in. 97 bucks. You can't even take a girl on an adequate date. Ask Lance, the serial dater.
That's the serial dater.
Yeah,
He's
you're
going to
taking a Waffle House
Applebee's
for
at
that.
happy hour, and he's like, "You're not getting off the happy hour menu. We're gonna
Bob
get
just got in.
3. We're
Dave
getting
just got
3
in.
orders of egg rolls."
Crab ragoon, and that's it, honey, and a water.
Yeah, take advantage of it. Make this your end of the year resolution. Dave just did. Bob just did. Cyrus did. Folks,
It's the first month of a quarter. So this is Roger. You know this because you're big into like looking at 13Fs and how institutions do like big rebalancings. First month of the quarter is October of the last quarter, and the last quarter is the most important quarter of the month because you have all kinds of stuff at play. You have money managers chasing positions. You have tax loss harvesting, which is happening this year because a lot of people are down and stuff. So it's a very important month. You also have the second or maybe first most important month coming in 2 months in December, which is the last month of the year. So this phenomenon is only going to grow this quarter at the turn of the year, at the end of the year, and into the turn of next year. So 3 out of the next 4 months are massive. And November's pretty big too, but I'm saying it's a really good time to get in there.
and if you guys have any questions at all, reach out to customer service. They're available right now. It's going to get really busy around 1-2 o'clock. This is the time to do it right now. Get in. We're giving you guys an opportunity to get ahead of the crowd. This is really like VIP, ahead of the crowd. Call 877-212-2649. Bob just got in. Every time I look in here, I see somebody else getting in. Bob, smart. See, Bob just got in for 6 months. Les got in for 6 months. People are taking advantage of this. So you can go $97 a month, or you can go 6 months, or you can go to a year. And at every stage, you could save money. Save money, get in, 9 new trades waiting for you. What is there to talk about? This is a great opportunity.
You get the House of Cards report with like a great long and a great short idea.
Right.
The best stock and the worst stock in the world to own based on what I believe to be an impossible shift in how the American dream is lived or not.
Yeah.
Right.
I think everyone here agrees on that, though. I think we don't agree on a lot of things, but we all agree that they're screwing over the regular Joe. They're making home ownership impossible. It's not. Wake up. Wake up. This is not an accident. This is by design. It's going to benefit people. You might as well make money with the people it's going to benefit.
Right. Absolutely. Folks, appreciate it. Thank you. And if you have any questions, please feel free to reach out to us. I think this is Tom has just got in. This is great. Look at that. Lee just got in.
Let's go.
This is great. This is great. I love it.
And there's a 30-day guarantee on this. So it's basically like a risk-free offer. So
Oh, definitely.
it's hard to beat
You got to
that.
be careful, Laura. I'm sure you haven't been to our lawyer summer camp where we all sit around in suits and ties and read a bunch of books and sing camp songs about what we can and cannot say. There's no guarantees in this life except for death and taxes. Okay. Remember that.
Very true. Death and
IRA friendly. You could start with a small account. And I gotta log off right now, guys, but I'll talk to you later. Thank you again for everything. Jeff, Laura, Lance, I'll see you guys later.
Yes,
Bye,
thanks everyone for joining us
Someone
today.
post in the chat.
Remember,
Connie, Dewey just got in.
Yeah.
Look at that. We got Alejandro just got in. Dewey got in. Connie got in. Vladimir got in. This is
Welcome
hot,
to
Jeff.
everybody. Thank you for listening to my
And-
presentation. If you need to
and-
know more, I'm doing a deep dive at 1 p.m. So maybe post that too.
Right. And then Lance, did you have something? Did you do a wait for me?
1 p.m. Jeff will be live in
Oh.
full details. I just heard. So
Yeah.
1 p.m.
mark
I'm
it
gonna
on
go
the
drink some
calendar.
honey tea. Maybe have another espresso on top of that.
Yeah,
Do some
maybe
jumping jacks.
Jeff will be sipping his green tea with honey to soothe his voice, and he'll tell you about how rent's gone up 30 to 50% year over year.
We're doing guru athleticism over here. This is not just your normal, like, financial information. This requires
is
mind, body,
real,
soul.
behind the scenes stuff that you won't hear on the real media or from other gurus out there.
I think a
Pull
lot
back
of
the
people
curtain.
get a little bit nervous around that work with us and for us when I start talking, because they don't know what the hell is going to come out of my mouth and they don't fully agree with everything I'm saying. But I think a lot of you that are out there watching me right now are nodding your head saying, hell yeah.
Yeah,
You're right.
I mean, who called the bear market from the beginning of the
They're
year?
nodding their head. They're going, yep, they want us to be poor. Yep, they do. We go on, Jeff. Keep ranting. Yep.
Yep.
It's not an accident, kids. But it doesn't have to mean that you're part of this collateral damage. Take the power back. Make money. Make money for yourself. That's how this system is really predicated.
We put the link to the room in the chat. It's special.wealthpress.com/encore.
Yeah.
Encore. So that is great.
Do you guys
All right.
enjoy this? Do you guys enjoy when we talk like this? You all that are watching out there, when we freestyle it? We have a very structured regimen. Our teacher Laura sends us her syllabus every morning. And then I read
I
it
send
for
a
about
very
15
loose
seconds.
agenda.
I-
Don't listen to him, people. I send a
I
loose
speed read
agenda.
I speed read it like I speed read everything. And I'm like, okay, she wants to talk about oil. She wants to talk about what Russia's doing, maybe, and then like, I'm like, all right, I'm still going to end up talking about what I want to talk about. With all due
Real.
respect, Miss
It
Laura,
works
you're
for
awesome.
me. It
You're
works
awesome.
for me.
We try to bring y'all what's really happening, not the fluff and duff of, oh, this is a good stock, this is a bad stock. We try to tell you guys, hey, this is what's happening in the markets. This is reality. This ain't the news that you're gonna read or no PMI, job number, Fed thing. No, all those people are lying to you. Let's be honest. We're trying to tell you the truth, straight shooters, without all the, mumbo.
They're
jumbo out there.
ideologues, man. They're either salespeople that have to sell a certain product or angle, or they're ideologues.
Yeah.
We're not. We're here for
You
the
know,
money. We're here
The
for
goal is
honesty.
to help you guys and girls out there
Yeah.
take control of your book, your portfolio, make the best informed decisions you can, because at the end of the day, you click your mouse. It's up to you if you want to.
Listen, if I suck, if I gave you 9 dog poop trades, you're all going to come and say, Jeffrey, give me my money back. And that's coming out of my pocket, y'all. That's coming out of my dough. So pressure's on me to perform, and not just like, saying pretty words. I got to perform. Those numbers got to work. That math has got to work for you. So I like it that way, though. That's what I like. I like that pressure. I like we eat what we kill. I like that. That's where I'm from. I'm from that world. I'm not from the glass tower world of Jay Power, where you can suck, destroy the world economy, maybe on purpose, maybe not, and get promoted or extended, whatever the hell it is.
I think you're talking about Janet Yellen too, out there.
I'm not from that world.
Take a cush government role and be U.S. Treasury out there. Hey, everything's great and sunshine and roses. It's not. There's a lot of stuff that's really bad. There's a lot of people that are hurt. There's a lot of. I have a buddy I just talked to this morning. And he's down $90,000 this year on his trading account, and he's a pro. He does this for a living, and he's like, everything I do, I think it's great, and then the week later, I'm down. I'm in the hole. So I feel.
You know what advice I would give him? You know what advice I would give him? Chill, stop, take a breather. You're good. You're just getting in your own head. You're like, we got a field goal kicker on my college football team that got a scholarship to kick field goals. He can't kick extra points. It's not that he doesn't know how to kick. He just went mental. Same thing happens in trading. This market will make you mental. So if you're in one of those tailspins, you're getting that vertigo, you have that, you have, what is it called when a plane is like lost control and a pilot doesn't know what he's doing? Tailspin. If you're in a tailspin, just stop. Take your hands off the wheel, man. You don't have to trade or trade big.
Or trade a 1 lot or a 2 lot. If you're trading 10 lots, trade 2 or 5 lots. Scale down, build some reps. Think of maybe, I don't want to say another strategy, but maybe you get Jeff stuff. Maybe you take a couple, you do it smaller, you just read, or you analyze it. But build some confidence out there. Start building some repetition, and just try to get consistent. Not every trade's going to be a winner, but you could have one big trade that makes up for 5 losers or so. Right?
That's the degenerate answer. Don't stop. Just keep going. Temper it down a bit, but don't stop.
Check out Jeff's. Look at the easy link. MFE. Very, very easy to use. To use too. But check it out, and then Jeff will be going live in detail at 1 p.m. Eastern. Right?
That's what I'm doing.
Excellent. This was fun. I'll have to let you guys ramble more and more. Clearly,
we're working on it. We're working on it. Maybe not today, but we got something in the pipeline. Stay tuned.
It's mayhem. Awesome. Great to see you.
There will be no syllabus for that one, though.
That's
no syllabus. That's the only stipulation. Not from someone else, anyways. I'm not.
I will say this: the more we stay on, the more the market's going up.
Let's go.
Oh, really? Are we the lucky? We the lucky strike here?
All right, y'all. See you at 1 o'clock. Peace.
Right.
Bye-bye.
See you, everybody. Thanks for joining us today, everyone. Have a great day.
All right, the link is still in the chat. So Jeff will be going live at 1 p.m. There's a link in the chat. Then if you want to get to the trades, there's another link. You can get the 9 trades plus the 2 House of Cards stocks as well. Pretty interesting set of trades this month. There's an EV play, a cruise liner, bunch of energy plays. So check that out. See you soon.